Well, this is certainly not a systemic crisis, but Credit Suisse certainly has a crisis. But you know, we should not treat the symptoms, but the root causes that such casualties are happening. And the danger is always that we just focus on changing people, but stick to the same business models, the same incentives, exploiting the same regulatory loopholes. And the worst thing of all, particularly in European investment banks, they are only able to employ the B-League US investment bankers. And, you know, the shareholders, of course, are paying the price for that.
You've said some fascinating things there already, Beat, as well. I just want to say that Credit Suisse shares caught up 2.9% in pre-market after the overhaul, which is something that we said here on Squawk that actually the shares will only ever find a line in the sand in terms of the shareholders' reaction once they've quantified the losses and actually taken some action. So that is exactly what has transpired. Shares look like they're up 2.9% in pre-market. But you made some extraordinary statements there as well, including that European investment banks will only ever be able to hire B-League investment bankers. You clearly believe that, Beat. That really means that the European investment banks are doomed to be second-tier players, yeah?
Well, they have been second-tier players very clearly, latest since the 2008 crisis. And the reasons for these casualties which have happened to various universal banks in Europe with US investment banking exposure have always the same reasons. It's regulatory arbitrage, it's asymmetric incentive structures, it's politicians and regulators in Europe across countries who look away and treat systemically relevant universal banks as private enterprises, which they are clearly not. And I think the root cause of the whole problem is in the revoking the Glass-Steagall Act in '99, which separated commercial banking from investment banking. And in 2008, that came, of course, then to the huge crisis which we had in the US. But then the US at least took regulatory measures to split banking activities in separate parts, again, not quite like Glass-Steagall. But the Europeans simply continued with their universal banking model. And, you know, if this is not changed really at the root cause of the problem, we will see more casualties this year in Europe and much bigger ones. And then at some stage, we will see one which will be systemically relevant. And then the regulators, of course, will then act. That's not the case here. Credit Suisse certainly has a serious problem, but they are going to address it here. And the bank, of course, is not in danger as a counterpart. That's also very, very clear. But expect in the very easy monetary and also expensive fiscal environment, yeah, you can expect that we will see more such casualties because risk assets will rise, boosted by unlimited liquidity and by the economic liftoff, which we will see this year and next year.